Introduction. Fast-moving consumer goods (FMCG) sector is the fourth largest sector in the Indian economy, with household and personal care accounting for 50% of FMCG sales in India. Growing awareness, easier access and changing lifestyles have been the key growth drivers for the sector. The urban segment accounts for a revenue share of around 55%, is the largest contributor to the overall revenue generated by the FMCG sector in India. However, in the last few years, the FMCG market has grown at a faster pace in rural India compared with urban India. Semi-urban and rural segments are growing at a rapid pace, and FMCG products account for 50% of total rural spending. Market size. The retail market in India is estimated to reach $1.1 trillion United States dollars by 2020 from $840 billion United States dollars in 2017, with modern trade expected to grow at 20%-25% per annum, which is likely to boost revenues of FMCG companies. Revenues of FMCG sector reached 3.4 lakh rupees crore, 52.75 billion United States dollars in FY18 and are estimated to reach 103.7 billion United States dollars in 2020. The sector witnessed growth of 16.5% in value terms between July-September 2018. Supported by moderate inflation, increase in private consumption and rural income. The FMCG sector is expected to grow at 9 to 10% in 2019. Rise in rural consumption to drive the FMCG market. It contributes around 36% to the overall FMCG spending. FMCG urban segment witnessed growth rate of 8%, whereas rural segment grew at 5% in quarter ended in September 2019. Investments, developments. The government has allowed 100% foreign direct investment (FDI) in food processing and single brand retail and 51% in multi-brand retail. This would bolster employment and supply chains, and also provide high visibility for FMCG brands in organized retail markets, bolstering consumer spending and encouraging more product launches. The sector witnessed healthy FDI inflows of 15.36 billion United States dollars during April 2000 to June 2019. Some of the recent developments in the FMCG sector are as follows. In November 2019, ITC Ltd acquired 33.42% stake in Delectable Technologies, which is a vending machine startup. India's first kids cooking oil launched by Mother Sparsh in 2019. In June 2019, ITC launched dairy beverage range Sunfeast Wonders Milk in 4 variants. In November 2019, Santur launched Santur Deo Pocket Perfumes exclusively for West Bengal. Nestle plans to invest 700 crore rupees (100.16 million United States dollars) to open a new plant in Sanand for Maggi. ITC to invest 700 crore rupees (100 million United States dollars) in food park in Madhya Pradesh. Patanjali will spend 743.72 million United States dollars in various food parks in Maharashtra, Madhya Pradesh, Assam, Andhra Pradesh and Uttar Pradesh. Dabur is planning to invest Rs 250 to 300 crore 38 United States dollars and 79 cents minus 46.55 million in FY19 for capacity expansion, and is also planning to make acquisitions in the domestic market. In May 2018, RP Sanjeev Goenka Group created an 1 billion rupees (14.92 million United States dollars) venture capital fund to invest in FMCG startups. In August 2018, Fonterra announced a joint venture with Future Consumer Ltd, which will produce a range of consumer and food service dairy products. Government initiatives. Some of the major initiatives taken by the government to promote the FMCG sector in India are as follows. The Government of India has approved 100% foreign direct investment (FDI) in the cash and carry segment and in single brand retail, along with 51% FDI in multi-brand retail. The Government of India has drafted a new consumer protection bill with special emphasis on setting up an extensive mechanism to ensure simple, speedy, accessible, affordable and timely delivery of justice to consumers. The Goods and Services Tax (GST) is beneficial for the FMCG industry, as many of the FMCG products such as soap, toothpaste and hair oil now come under 18% tax bracket against the previous 23 to 24% rate. Also, rates on food products and hygiene products have been reduced to 0 to 5% and 12 to 18% respectively. The urban